Greetings, members, one and all of the Salivation Nation. Gold versus silver. Should we really pit one metal against the other? Well, we're going to make a little comparison and look at it through the eyes of Seeking Alpha article here by Stephen Seville, Gold versus Silver. Let's explore. Yes, this is a piece here we're going to take a look at and see exactly what they're talking about in terms of silver and gold and the performance of both. On the summary, we can see that within 10% of its 50-year high, the gold-to-silver ratio, which was reached in 1991, and within 15% of its multi-century high, which was reached in the early 1940s. And a way to interpret the ratio chart is that silver has huge upside potential relative to gold. But there is a realistic chance that the ratio will make a new multi-century high, in effect a new all-time high, before silver embarks on a major upward trend relative to gold. And that is what's intriguing about this piece, I believe, is that though this particular author believes there's some potential, because of the upside potential, because of this high ratio, he believes that we're going to break new records here with it. So last July, the gold to silver ratio came within 10% of its 50-year high, which was reached in 1991, and within 15% of its multi-century high, which was reached in the early 40s. The following monthly chart from goldchartsrus.com shows that on a monthly closing basis, the ratio has just made new multi-decade high and is now within 10% of a 300-year high, meaning that silver has almost never been cheaper relative to gold than it is today. And let's take a look at that. You can see that chart here. It's pretty amazing. Look back here. Since 1720, a lot of times, you got to think about it. The gold price was fixed, and there's a lot. That's where you're seeing a lot of the data hold steady here. But you look here, and you look at 100 here in the 1940, it did reach above 100. And in 1991, it got very close. In fact, I thought it got over 100. I thought it got to 101 in 1991, but maybe not. But now it's here at about 95.34 as of with this chart here, showing that. Very interesting indeed. That's quite a telling chart. But you can see even how widely dispersed it is. Only closes down to this narrow ratios, to what we would say, the out of the mine or the 15-to-1 area, closer 20-to-1, 30-to-1, in these big recessions or big moments where there's a massive price increase. So one way to interpret the gold to silver ratio chart is that silver has huge upside potential relative to gold. It is correct, but there's a realistic chance that the ratio will make new multi-century high, in effect a new all-time high, before silver embarks on a major upward trend relative to gold. This is not the author's preferred scenario, but a new all-time high in the gold to silver ratio could occur within the next 12 months due to a major deflation scare. And keep in mind, in deflation, that's where you're going to see the prices really tank. And because silver, in some way, is seen as a commodity, in fact, over 55% of its use is as a commodity. This makes perfect sense. The author's current expectations that the bulk of this year will be a U.S. dollar weakness and signs of increasing inflation, which is a financial economic landscape that would favor silver over gold and pave the way for some mean reversion in the gold to silver ratio. However, if the stock market bubble were to burst, economic confidence probably would tank, and there would be a panic towards liquidity. We saw in some ways some of that last Friday, actually. For the general public, that would involve building up cash, but for many large investors, it would involve buying treasury bonds and gold, even though those bond yields are really low right now. Silver eventually would benefit from the strength of the gold market, but the silver market is not big enough and liquid enough to accommodate investors who are in a hurry to find a safe home for billions of dollars of wealth. Initially, therefore, the gold to silver ratio could rise sharply under such a scenario. The scenario described above would lead to panic at the Fed, eventually resulting in the introduction of the most aggressive asset monetization scheme to date. That's the point when silver probably would commence a major catch-up move. And that is fascinating situation that could arise, but we've heard other analysts talk about, especially before a major economic meltdown, where you have a massive deflationary period before a massive hyperinflationary period. And so that is the scenario that could play out. But it is interesting to see, and we have to look at past representations and things that happen. I mean, look at here, the stock market crash of 1929, where obviously there was a fixed price here in 1920. It was really low. It looks like around 13 to 15 to 1, and then it spiked up here. And then you've got, in the 40s where it dipped above or spiked up above the 100 to 1. It's interesting to see this historical chart of the gold to silver ratio and where things went. We look here in the late 60s here, where we removed silver from our coinage, and you saw the gold to silver ratio tighten quite dramatically here. And this chart does not have recessions on it. But look here, 1980 is the last time it went down to, I think it was I thought it was 30. Didn't know it was this low. I'm not sure where they're getting their data from, but how it could be skewed. But this looks is obviously under 20 here, and but here in 2011 it did get into the low 30s to 1. And that was the last time that we saw the squeeze that high. And really, for all intents and purposes, between 1960 and 2000, or in the late 90s, it was spiking up and up and up. And at that period of time, photography and silver as used in photography was still pretty strong, albeit admittedly, as we got closer to 2000s, less and less of that was going on. But regardless, it is quite something to see the movement of the prices or the ratio as we go from 2000. It goes up and it goes down. It goes up, and now it's starting to another climbing upwards here towards that 100. Ever since 2010 or 2011 and 2012, we saw that ratio really kind of spike up here, and we're nearing our all-time highs. Now, I do differ from the author in this. I believe that silver, especially in this day and age, there's a lot of other factors that are not being taken into consideration. Yes, silver has an upside potential, but silver is being utilized more diversely in industry, in technology, in the biomedical field. And because of that, it is being seen as a commodity, I think, more and more. And even if you look at past charts for the usage of silver, people aren't excited in the world as much as they were before in the bullion markets. And until there's excitement in the bullion markets, where people are actually getting the physical as opposed to the ETFs, but even if they do increase ETF holdings of it, I think that could possibly play out. But I think the physical bullion side is really where it's going to have an effect and change the dichotomy, change the view of how silver is known in the world. Because right now the East is looking at gold. Central banks around the world are looking at gold for that safe haven asset. Not many of them are talking about silver. For those of us in the West that are accumulating silver, we see it, especially in the physical form. Most of us see it as a wealth preserver, and I believe that is the case in the long run. But it's very difficult to make the case, especially when you see these big dips in the silver price and an ever widening gold to silver ratio. And when you see the prices of silver move more in line with it as a commodity, it makes it difficult to kind of make the case, even though a lot of what we do buy is relatively available in bullion form. I believe it's going to take a lot more of new stackers joining the fray, new people that are coming in and accumulating the metal, seeing an opportunity, number one, because of the high ratio, but also being realistic that what the author says here could be true, that ratio could actually increase before it decreases. And that is the bottom line. Silver, I believe, sells itself, and it's a matter of time before people will either interpret or misinterpret it to its performance. But I think this chart is quite telling between the gold and silver ratio and where we have been in the past and we are headed in the future, because the volatility between the gold and silver ratio is really nothing new, as this chart definitely shows in various periods through history, even in the early 1900s. But we are, on average, averaging out a new level of an average of the gold to silver ratio. And that average, I believe right now, is right around 70 to 1. If you follow my mouse pointer, you can see here, it's about right here, between about 70 to 1 is kind of that new average. At various times, the best we could think of is in the high 40s, otherwise, where that's been the lows, and then obviously we're seeing 80 to 1, and then moving up to 85, 86, and 90 to 1, and working its way up. I believe we will see it widen, as the author says. As for the deflationary period, we'll see. There's a lot of different factors that come into play. If a recession is sparked because of the recent ailment that everybody's been talking about as of late, that could spiral things in another direction, and that could be bad news. This Fed half-point rate cut, I think, is concerning a lot of people nowadays. And as of right now, the gold to silver prices, as of the recording of this video, are, they're down a little bit, but negligibly. Silver is actually really not moved at all. It's still $17.28, but gold is only down slightly. So there it is. We'll see how this thing plays out in the markets. But what are your thoughts on gold versus silver in relation to the gold to silver ratio? And as a stacker of either metal, are you for one or the other, or are you for both? Me, I'm for both. I think that but I'm for both as long as you understand both markets. And really, collectively, there's a lot of things that can be applied, a lot of principles that can be applied to gold as well as silver in terms of understanding it and being realistic about it and its performance. Because you can take a big hit on gold and be awfully discouraged as well as silver. We'll see how it all plays out. Post your thoughts below. I'd like to extend a multitude of gratitude to you all for watching and encourage you to please rate, share, comment, and subscribe.